This is Financially Fit Radio with Corey Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Corey provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Corey Sickles.
Welcome back to another episode of Financially Fit Radio. I'm Corey Sickles with Safe Harbor Retirement Group and Wealth Advisors. If you'd like more information about today's show, just feel free to give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. And if you check out our website, be sure to click on that radio page. You can check out past shows as well as subscribe to our show on Apple Podcast, Amazon Music, Google Podcast, or Spotify. Also, you can watch today's show right there on YouTube. Just type in Safe Harbor Retirement Group, and you can also watch other videos on different types of financial topics. You know, we're here to address any inquiries you may have, or, you know, just remember that all meetings that you do schedule with us are complimentary. There's no financial obligation. And the one thing that we'd want to do more than anything else is make sure that you have a great retirement. And the best way to do that is to set up a no obligation meeting with us so we can look at your financial plan. And if you don't have one, we'll put one in place for you. Well, today we're going to talk about really how does life insurance fit into your overall retirement scheme? I think it'll be a good conversation, but before we kind of dive into that, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
I'm doing great, Corey. Thanks for having me on the show. Great to be here. I think we have a very important topic. Listeners will want to pay attention, take notes. I'm sure they'll have questions as well, and they can just pick up the phone, like you said, and give you a call if they do. But I've been good. Just celebrated my birthday this past week, about a week ago, with my family, and we had a good time. You know, I'm not aging though, right? I mean, we celebrated my birthday, but it's not like I'm getting any older. People ask me, how old are you? And I go, I'm not getting any older. I don't feel older, but I'm doing good, Corey. How about you? How are you doing?
You know, I'm doing good. You know, the thing, Tony, is even though we are aging, you know, mentally, we don't think we're that much older until you try to do certain things, and then you realize I am a little older than I was a few years ago.
Yeah. Well, my wife did on Friday of this past weekend. My wife said, I want the treadmill. We have this really big treadmill, like the kind they have in like gyms and stuff, you know, workout centers. And it's been in our laundry room, shoved to the side with stuff all over it. Haven't used it in a while. She's like, I want you to clean out Adam's old bedroom, our son's old bedroom, and move that in there. And I don't know in the first place how we got it intact inside that laundry room. But Corey, let me tell you, when I thought I could do it myself, lifting that thing, they're awkward, even with the bed folded up. It's like, I'm like, this isn't going to fit through the door. Had to take the door off. Then getting it, because there was a sharp turn and all this other stuff there, it was almost impossible. I thought we wouldn't be able to get it into the room she wanted it in. But I had her come down and we lifted. I have never been so sore the next morning. I'm like, just from lifting that thing and twisting it around. Like, I used to be able to do this stuff and not feel it, right?
Yep. One thing I don't do anymore, Tony, is help people move.
Right. I used to do that a lot because I grew up, my dad was a furniture mover. He drove for North American Van Lines, a division of it, Andrews Van Lines. And I used to do that every summer. Like, and I mean, carry furniture, move people. So when my friends moved, they know I know how to finagle stuff to fit it through a doorway, right? And get that couch to turn and go down the stairs without scraping the walls. So I'm pretty good at all that. My dad was an expert, and I learned over the years, So everybody had me help them move, but those days are done, Corey. I mean, you and I don't look like we're aging. You look like you're probably 20 years younger than you are. People have no idea, right? Corey could have been retired 30 years ago, people.
Yeah. Yeah. But that's one thing that I no longer do is help people move.
Yeah, true. Okay, so what are we talking about on the show today?
Life insurance. And, I think this is one thing that when we kind of discuss that, when we're going through the retirement process, or, a lot of people think that they don't need life insurance. And I think that's, as they go near retirement, they think that they no longer need, maybe the big death benefit or anything like that. But if you look at life insurance today, there's three things that life insurance can do for you, just with a regular typical policy. One is obviously is a death benefit. I think everybody knows that. The second part of that is now that death benefit can be used for long-term care if you would happen to go into some type of facility.
Mm-hmm.
Or actually, when I say long-term care, even if as long as you can't perform 2 of the 6 daily activities, you can activate that. And then lastly, you can also use that for cash value, which means you can be put in a position potentially where you can receive tax-free income in retirement. So these hybrid policies today have the ability to do those three things. And I think a lot of people, and I think more than anything, I think it's going to be more on education.
Sure.
They're probably unfamiliar with it. And, if you're unfamiliar with something, you probably don't really want to, maybe dig deep into whether that's going to be a benefit for you. But I think life insurance is something that can really benefit people, especially, for retirement. But more importantly, the best time to get life insurance is today. I will say that. We age. As we get older, the cost of life insurance does go up. And I think what a lot of people think about is this too, Tony. When you're younger and you have kids, right? And obviously, if you're married, I think a lot of people, they'll go out and get that term insurance, which is really the cheapest that you can actually go out and get a high death benefit, and they'll get it for like 20 or 30 years to be able to carry that. But the one thing that I will say is you still might want to think about actually getting some type of permanent. We'll talk about that because you're going to have other benefits later on. And obviously the earlier that you do that, you're going to be able to build cash value, as well as you're going to have a lower cost of insurance as well.
Well, I love the idea, and I didn't understand this before we started working together, Corey, and doing these shows together. But I love the idea and the strategy of utilizing a cash value life insurance policy. I think a lot of people don't understand life insurance. Sometimes insurance has a negative, oh, I pay all this money in and I might never be able to utilize it or get that money back. But life insurance isn't like that. You're going to get a death benefit. So not only can you use it to, and maybe you'll talk about this a little more, one of the biggest advantages is a way to pass on, money to your loved ones after you're gone, tax-free, right?
That's exactly right.
Yeah. And like you just said, another big advantage is you can get possibly tax-free income out of a life insurance policy for retirement. You can take money out of it to use for things like long-term care, right?
That's exactly right. So, let's just kind of go back to the basics of this real quick. I mean,
Sure.
I think we want our listeners to understand really the difference between term and permanent.
Okay.
So when we start talking about term, you're going to be able to, you're going to have it for, 10, 20, 30, 40 years, whatever years that you want to be able to do that. In most cases, It's going to be the same amount of premium, and it's going to be the cheapest because depending on your age, odds are you're going to live past that, which is why it is so cheap. So you might be able to go out and get a $1,500 a year policy if you're, say you're 30, and you might be getting a $1.5 million to $2 million death benefit if something like that does happen. And the reason why you do term, of course, while you're younger is because it's the cheapest to be able to do. But really what you're trying to do is provide that security for your family.
Yeah.
If something would happen to you, obviously your income is gone, but you still might want to be able to pay for, kids or, your college education for your kids. You might have to do some type of income replacement, for your spouse and for your family. And that's really what that term insurance is there to be able to do. So then we kind of start thinking about, okay, now how can we maybe utilize this later on in life? And you can actually do what we call permanent type of insurance. And there's different types. You have whole life mainly and universal. But the one that we really recommend here at Safe Harbor is index universal life insurance. And we've talked about fixed indexed annuities before, where you put money into it. When the market's negative, you don't lose any money. But when obviously when the market's positive, you can actually, make returns based upon the market. So the nice part about it is you can't lose any money when the market's down. You get you just make it when, during the upside. And the nice part about, that is now when we start dealing with life insurance, it's going to work really the same way. The only difference is even when you don't make money, you will have cost of insurance that's built into it as well. And we obviously we can run illustrations. And the one thing I will say is when we start comparing like caps is how much money can I make if the market does well? And life insurance caps are usually a little bit higher than fixed indexed annuities, which means you can make a little bit more money off of that as well. And if you do it the right way, one thing that we usually try to do for our clients is, depending on your age, but we try to have you fund, which means you're paying your premiums. That's building cash value. We try to do that only during the years that you're working. So obviously, when you actually retire, you no longer have those payments. And sometime in retirement, you're going to be able to actually trigger some type of income coming out of that. And again, if we do it the right way, it's going to come back to you tax-free.
Wow. And there's still a death benefit attached, right?
Yes, there is a death benefit attached. And just to kind of give you an example off of that too, earlier in the program, talk about the three things, right? Death benefit, long-term care, as well as cash value or, potentially tax-free income. Now, let's just say you have a $500,000 death benefit policy and something does happen to you where you might need that for, they call it, usually it's chronic issues, which means if you can't perform 2 to 6 daily activities, then you can actually activate this to help pay for those costs. The nice part about that is you're able to maybe even stay at home. You don't have to go into an actual facility. You can actually get in-home care based off of this too. And in most cases, you're going to be able to get about 2% on an annual basis of whatever that death benefit is. So if you have $100,000, that's $24,000 a year that you would actually be able to pull out. And obviously the higher that goes up, you're going to be able to get more as well. I mean, when I say 2%, it's 2% a month. So 2% a month of that death benefit.
Sure.
So the nice part is let's just say you have a $500,000 policy and maybe you use $200,000 for chronic care or for long-term care, then you're still going to have some type of death benefit. The difference between that's going to end up going to your families or to your beneficiaries. So, obviously if you don't use any of it, then that's going to be able to go to your beneficiaries. But if you do exceed that death benefit, then obviously there would be no death benefit going to your beneficiaries, but you were able to utilize all that money for the care while you were living as well.
Yeah. And that makes sense. And so the advantages and benefits of life insurance are obviously huge. And, you're going to take time to insure things like, your car. Why would you not insure your income for your family? Why would you not insure your life? I would hate it if something happened to me and my salary was gone from our family and my wife would have to try to make it on just her income. She wouldn't be able to do it. And so what do you do? Right. And
Exactly
I think
right.
this is true for most people, especially if your spouse doesn't work. he or she. So, I'm insuring via life insurance that if something does happen to me, my salary will be able to be replaced, or the majority of my salary, right?
Yeah. The other side of it though, Tony, too, is let's face it, when you're retired, or even, I mean, even today, everyone's working on some type of monthly budget too, right?
Right.
So if something does happen like that, you might be able to, obviously you want to be able to use that death benefit to cover your final expenses.
Yeah.
I mean, whether you're going to be buried or cremated or whatever else, there's a cost associated with that. You might want to pay off your debts, pay off that car that you just talked about, or potentially be able to pay off your mortgage, or be able to just pay off any other credit card debt, or who knows what other type of debt you have. But by eliminating all these debts, you're also going to be able, you're lowering what that monthly budget's going to entail going forward as well.
Yeah.
So, and obviously depending on when someone would pass, you might be able to pay for college education and things like that. So it's very important to be able to, make sure that your loved ones are going to be taken care of, if something does happen today. I mean,
Yeah.
we never know when our day is going to come. But the one thing we can do is be able to prepare to make sure that it's going to be, that you're going to be able to do the right thing for the ones that you do love.
Yeah. And let's remind our listeners right now, Corey, before we move on, how they can get a hold of you and get a plan in place. And maybe they think, well, I've got insurance, I've got life insurance through my work. Get a review, get a second opinion. And Corey, I know that you and your team there at Safe Harbor, you do this all the time for people, and you'd be more than happy to review where, if a listener needs something reviewed, they can come in, set up a consultation, and you'll look at where they're at and tell them, oh, you really don't need this. You're paying too much. This is something you probably don't need based on your situation. Sometimes you tell them they leave saving money because they're into a vehicle that really doesn't fit their needs, right?
That's
Or
correct.
sometimes they're way underinsured. They may be way overinsured, way underinsured, or not have something in place that they should. So I think it's well worth the price of admission, which that initial consultation, there's no charge, no obligation to give you a call. What's that phone number and website once again for our listeners and viewers?
Yeah, our phone number is 614-760-0670. And you can also visit our website at safeharboroh.com. And just like Tony said, one of the things that we can do is we actually have a custom review that we can actually do for you. We can review your current policies to make sure they are working for you. And just like anything else, products change, products get better. The longer you've had that other type of life insurance product, there might be some other ones out there that's going to be more beneficial for you. And just remember, we are a fiduciary, so we're going to only recommend things that are in your best interest. If it doesn't make sense, we'll tell you that you have a great policy, you're all set up. But if you don't, we'll be able to maybe provide some suggestions for you to be able to, really to enhance your overall retirement plan. Again, our phone number is 614-760-0670. And again, our website is safeharboroh.com.
All right. Well, Corey, this has been a great discussion so far. And talking about life insurance benefits, you've mentioned long-term care, income in retirement, tax-free income, leaving a tax-free legacy to your loved ones, the death benefit. And you also mentioned something that piqued my interest, and that's helping pay for college for grandkids or for children. And I've got 3 kids in college. My son is just out of college, but still paying for it, and we're trying to help him out. But that can get very expensive, and maybe a death benefit, you could go toward that, or you could use some of that money to pass along so they can pay those student loan bills, right?
That's exactly right. And one of the other things that you can also do, Tony, is because we've done this quite a bit too, is we know that if you have kids at one point in time, there's that chance they will go to college, right?
Right.
And college, it seems like it's only getting more and more expensive. And 529 plans are pretty popular out there as well. But one of the things that we can also look at does it make sense to actually even put money, build cash value to where it can be used for college education for your kids. And we've done quite a bit of these. And the nice part about this is you fund that while they're all the way up and through high school, through 18, 19, depending on your age, I guess.
Sure. Sure.
But you fund that while they're in high school, and you let that build for all those years. And then when you do take that money out, if we do it the right way, they're going to be able to take that out as tax-free income as well, that can be used to be able to pay for any type of college expenses. And here's the nice part about it. When your kids are young, we don't know whether they're going to go to college. And if you have a 529 plan, for example, at some point in time, if it's not used for education, then it's going to be taxed as ordinary income, and you might even have some type of penalty on top of that. However, with life insurance, the nice part about it is if they decide not to go to college, now they have a cash value that can maybe be used for a down payment for a home, or maybe some type of other type of could be used for a wedding, for example. But my whole point of it is that it can actually be utilized not only for college, but for other type of things they might need that cash value for. And the nice part about that is we have different types of illustrations. Let's just say you fund that through 18, they never take it out. It grows over time. Now they actually have a tax-free income vehicle for their retirement plan later on in life as well. So there's a lot of benefits that you can actually utilize, for kids or for your children or grandchildren to be able to plan for college. And here's the other nice part about it. It doesn't even count as an asset, when you're filling out some of your college, applications and things like that as well, which could have a huge benefit if we're talking about financial aid.
Yeah. Yeah. The fact that it doesn't count toward income is huge in a number of ways. Obviously, tax purposes, but for qualifying for things, qualifying for certain medical benefits or for college scholarships and loans and things. So I think that's really, really good. That's a huge benefit right there.
Yeah, it is a big benefit. And, when we start really thinking about when you really start thinking about life insurance, I just kind of, because we're going to be wrapping up here in a few minutes, and really what we're talking about is being able to generate potential income, tax-free income. And here's one big difference: everyone knows that if you do have cash, if you put money into a Roth IRA, which is going to come back to you tax-free, you're only limited to a certain amount of year that you can put into these products or these type of accounts, right? Up to $8,000 this year if you're over the age of 50. Even if you're trying to really max some stuff out, it's $30,000 in your 401k. The nice thing about life insurance is there's no income limits, which means if you make too much money, then you can't even contribute to a Roth. Right. So with this type of product, you can put as much money into it as you want. There's no income limitations. You still have access to the cash if you do need it. And at the end of the day, it's going to be able to provide those three things: death benefit, long-term care protection, as well as income in retirement tax-free.
Yeah, the tax-free bucket needs to be funded for your retirement, and cash value life insurance is a great way to do that, Corey. Well, a good show. You answered a lot of questions about life insurance. I'm sure our listeners have more. How can they get a hold of you?
Yeah, for our listeners and viewers out there, you can give us a call at 614-760-0670, or you can always visit our website at safeharboroh.com. Remember, all meetings are complimentary. There's no financial obligation. And I would highly recommend you give us a call and let us review what you have. Just to make sure that you're in the right situation, the right products, to be able to make sure you're going to be able to use that, into retirement. And if you don't have a financial plan, we can provide that financial plan for you. And if you do have one, there's nothing wrong with getting a second opinion, not only on your financial plan, but your life insurance. Again, we're here to help to make sure that you're going to have the best retirement that you can and take advantage of it. Again, all of our meetings are complimentary. There's no obligation. And our phone number is 614-760-0670. And our website is safeharboroh.com.
All right, and that does it for today's episode of Financially Fit Radio.
Join us next week for another episode of Financially Fit Radio.
Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Corey Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.